Everyone, quick update for you today. The Bank of Canada has cut interest rates by 50 basis points down to 5.95% for the prime lending rate in Canada with the majority of lenders. And so what that means for you on a $500,000 mortgage, for example, you are going to be saving about $160 per month on your cash flow. So nearly $2,000 a year just from today's rate cut. And then moving forward, the Bank of Canada has strongly hinted towards further rate cuts. We may see another 50 basis points in December before more gradual cuts next year. Depending on the chartered banks and the Bank of Canada, the prediction is for still to see some significant cuts moving forward in 2025. We could see the overnight rate in the 2.25% to 2.5% range by next year, which would put variable rate mortgages in the upper 3% range. So again, substantial cuts planned and predicted for next year, depending on what you're looking at. I expect that we'll move towards more of a historical norm where variable rate mortgages will become lower interest rates than fixed rates, which has been kind of inverse for the last little bit. The bond yields have increased over the last week or two, meaning that fixed rates aren't necessarily coming down. They work independently than the Bank of Canada overnight announcements. And so the fixed rates, as I've talked about many times, are priced off of the bond markets, and the bond market is really reacting to the economy and what's going on out there. And so I expect to still see fixed rates next year to come down, although I think slowly and gradually, and not as much as I think a lot of people are planning. So how I look at strategy moving forward, if you're looking at buying a place, refinancing, renewing coming up, is the offensive play for me would be the variable rate strategy, is that it's going to continue to come down very likely. Fixed rates should gradually come down, and so that in a year's time, in 6 months' time, it's possible and likely that you're in a better position in a variable rate mortgage. Looking at fixed rates, on the other hand, it's the defensive play. Again, there's no better or right or wrong here, but it's the defensive play. It's very likely that you may end up paying more interest, but you get the peace of mind, maybe sleep a little bit better at night if you're that conservative and you just want to play defense, you don't want to risk it. Maybe you got caught up in the last few years of increases with your variable rate mortgage. So we're happy to chat. Thanks so much for tuning in. And if you want to chat or have a one-on-one discussion, more than happy to anytime. Thanks so much. Have a great day.